I am fascinated by the industry of college football, college sports. We talk about it a lot. And when we talk about these things, I love to catch up with Matt Brown, founder and publisher of Extra Points. You can find him on Twitter at MattBrownEP. And he joins us on the Adam Gold Show. I feel like it has been way too long. I know you were in town a couple of months ago for a podcast festival. How you doing, man?
I'm doing great. I think you're right. The last time we spoke, I want to say it was before the season started.
Yeah, definitely before then. It was like beginning of August. But I want to dig into a couple of things. I was going to jump right into the private equity. I guess it's private equity. I'm not sure. It's kind of a little bit of a gray area. But before we do that, I know you are a big video game connoisseur, and the college football game is back and all of that. But EA Sports was just purchased by a consortium that includes the Public Investment Fund of Saudi Arabia, $55 billion deal. What do you make of that?
I think this is probably not going to be good news for consumers. When these type of deals typically happen, and I wrote about this, I think about a week and a half ago, interviewed a few financial analysts. This is a leveraged buyout deal that's going to put $20 billion of debt onto the balance sheet here for EA Sports, which means that they're going to need to continue to be cash positive. There's going to be pressures from their new owners. Whenever there's these kind of transitions, right? How do we cut costs? How do we increase revenues? How do we stay focused on what we are most good at? Given the Saudi Arabian PIF's interest in esports, in mobile gaming, and where else they have ownership stakes, that would be where I would expect EA is likely to focus in the short term. So if you're a fan of any of the other game franchises that this company owns or operates, I'm normally a sports game person, but I loved Mass Effect. I think it's pretty likely that those kind of studios are going to, and that intellectual property is going to get sold off. I believe it is going to be less likely that this company is going to look into more speculative or not likely to be sure thing successes as like niche college sports games. Like EA's already out on college basketball after being in for 10 weeks. If you're one of the people that writes me every 3 weeks asking when the college baseball game is coming out, I would say, brother, I don't think it's coming out from this studio. and they're not going to get rid of the college football game. But I would not keep your hopes up for college handball anytime soon.
College handball would be fantastic. College field hockey would also be good. Carolina would be awesome at it. Do you mean like do you think the price is going to go up for the college football game? Can we expect live golf game?
It's possible. I'd have to dig back and to look into how profitable the existing golf. Yeah, the existing golf games are. Like I would imagine it's more likely in the next 2 years you're going to have a college football companion app on your phone if you're big into playing the game like one exists for FIFA.
Okay.
I think that's probable. I would not expect major changes to the college football franchise immediately, especially because this deal is going to take months to finally go into effect, and nobody wants to rock the boat while you're in between management changes. But if you're somebody that's working on boxing or on titles that are not the clear priority for this company, which I think at this point is soccer, football, and Battlefield, maybe The Sims, I would be nervous. For as difficult and full of transitions as the media industry has been for people like us over the last 5 or 6 years, I think the video game industry is in as tumultuous, if not more so, place right now. You should pour one out for all of our friends who work at the AAA video game studios. It's not been a good year for them.
Matt Brown, Extra Points, is joining us here on the Adam Gold Show. All right, now to the reason I contacted you about a week ago. The Big Ten is exploring. Private equity might not be the right term.
It's technically private capital.
Okay, so it's an investment that would put $2 billion into the league because, the Big Ten, they are rubbing nickels together to try to start a fire. In exchange for, if my math is correct here, a 5% share of the revenue. Michigan and Southern Cal, it looks like they're trying to block this deal. I don't know if it's going to go through or not. What are your thoughts on something like this? Because it would, I guess, give every one of the 18 members initially $110 million in cash, but that's a one-time payment for what and it's like 20 years of a 20-year deal. That's a one-time payment. I don't know if it's a great deal for the league.
Yeah, well, what I can tell you is that some relatively similar proposals have been considered from every Power Four conference,
right,
and some of the non-power conferences. Like, I don't think I'm breaking any news here if I say that there are schools in this market,
yep,
in this footprint, that are more interested in these kind of deals than others, right? Like, North Carolina kicked the tires on some of this kind of stuff.
Yes, they did.
Even before Belichick was involved. So I understand the desire. In my professional opinion, which, hey, I'm a reporter, so take that for what it's worth. If I was good at high finance, I'd be rich and I wouldn't be, slinging newsletters for a living. But I think these deals are typically pretty risky if you're a league like the Big Ten. And the reason for that is most of these public schools have, and really the private schools do too, have other mechanisms to raise capital if they need it. You can, push for state appropriations, which sometimes happens. You can sell bonds. You can borrow money from banks. You can fundraise. You can do other things that don't necessarily lock you in to 40-year contracts. What the Big Ten is betting on here is that, hey, if we get a gajillion dollars sent to us up front, we could spin off this new for-profit arm called Big Ten Enterprises and do a better job selling our multimedia rights and corporate sponsorships and these and conference tickets and these other things. And then everybody ends up making more money over time. And then schools that really are rubbing nickels together, like Rutgers and UCLA, can get the cash flow they need to be competitive pretty quickly. I think if that's what the schools needed, there are ways to do this without having to potentially give up control. And there's a reason why so many leagues and schools have taken these meetings and not signed anything yet. Because once they really get into the nitty-gritty, a lot of presidents and ADs have had that same concern. Like, it seems like we're giving up too much upside and too much flexibility for upfront cash payment in a world where things could change so much. By 2040, we're looking at 3 different Big Ten television contracts from now, if the Big Ten even exists.
Right.
Like, do you want to chain yourself to that kind of agreement? I don't think I do. And I think it's smart that the regents at Michigan and USC, 2 schools, by the way, that do not have permanent presidents, are pushing back on this.
Matt Brown, Extra Points, is joining us here in the Adam Gold Show. I had just one thought about this whole thing, because this ultimately is a for-profit. They're trying to create a for-profit. Does it in some way run afoul of the tax exempt status, or because the company that is apparently willing to infuse this money, because they're a nonprofit, does it somehow allow them kind of an out?
My understanding is that you're going to have 2 separate enterprises. You're going to have the Big Ten Conference,
right,
and Big Ten Enterprises. And the Big Ten Enterprises, as a for-profit entity, would have to pay taxes
Gotcha.
on stuff that it brings in. The point that you're raising, though, about potentially risking your nonprofit status is a concern that has been raised not just by presidents and regents at the campus level, but also from lawmakers, and not just Democrats, but also Republicans. This has been a fight that's kind of pops up every once in a while, really since the 1950s. And I don't think it's a stretch to say, once you kind of look into the financial books of a P4 athletic department right now and think, is this all really educational related expenses? Like, you're going to have some questions, especially as tickets get more and more expensive. The risk that everybody has to manage is, what's going to happen when somebody in D.C. finally decides they want to get serious about enforcing the tax code? Generally speaking, the answer has been not today.
Right.
I think that's what happened with the NIL era. Like, there were a lot of collectives that were absolutely not nonprofits that you and I and God knew. And the IRS said, this is not a nonprofit. Well, they got to be a nonprofit for 3 years, changed their minds, gave everybody a tax deduction, and nobody got in trouble. And that could be what happens for another 30 years.
Yeah.
It could change in a year and a half. It could change so the only people that have to pay taxes are blue state schools that Trump doesn't like. Who knows?
Right.
It's a complicated world right now.
The Ivy League's in trouble. Somebody in
Yeah.
D.C. would have to get back to work, though, before anything like that happened. Let me ask you this, because we have two bills right now that I don't know what stage they are in. We have the SCORE Act, which is mostly Republican-backed. We have the SAFE Act, which is mostly, I shouldn't say mostly, one is Republican-backed, one is Democrat-backed. For me, having read both of the nuts and bolts of them, I am more in line with SAFE than I am SCORE, and most people probably are not surprised by that. I am very pro-player and very anti-school. I think the SCORE Act is more restrictive than the SAFE Act. Neither has collective bargaining as the end game here. I think that has to happen, but regardless, Cody Campbell, who is one of the president's boys, is more in line. I don't think he's identical to SAFE Act, but because there's a component in there which alters the Broadcasting Act of 1961, making all the power schools lump their TV rights together to earn more money. Is that a possibility here, and would they earn more money?
It's a really good question. And I would say, is it a possibility? Yes, because should you change the Sports Broadcasting Act of 1961 is not an issue that really falls neatly on Republican or Democratic, side of the aisle. There are a lot of Republicans who have raised a lot of objections to the Sports Broadcast Act, and some of the most conservative members of the House have even held hearings, not really about college sports, but in trying to end professional sport blackouts.
Right.
And to do what may be a more consumer oriented move. I mean, the bill was written in a world before cable television was really a thing, certainly before streaming was a thing. A lot of the rules that were meant to protect high school football are completely being ignored by both the colleges and the NFL. So I understand why that might be looked at again. The idea that everybody would make more money if they combined all of their rights together is, I don't think that's settled by any means. One, the SAFE Act does not require leagues to do this. It only permits them. And I've talked to a couple of the lawmakers who wrote the dang thing and said, why on earth would the Big Ten agree to do this? Because even if they made more money, they would lose their political influence and their power over the Big 12. And the lawmakers were just like, because they'll make more money. I'm like, I don't think you have met Tony Petit.
Exactly.
But, that's fine. And so we don't know if they're going to combine. And then two, I honest to God think it is an open question about how much more money that they would make. I understand that Campbell is saying, and I've read an institutional capital firm that produced the research study to make this suggestion. But there's just not that many companies that bid on live television rights now. And over the next couple of years, the NFL and the NBA are locked up long term. Major League Baseball is kind of this weird spot right now. We've seen a really soft market for live television rights for some of these smaller college leagues. Like there's a reason that we haven't had a new Pac-12 deal announced,
right? Even
though it's been, we're on the 1 yard line for the last 7 years. So I think there's reason to be skeptical that these rights will automatically keep going up forever and ever, especially because the dirty little secret that I hear whispered around the industry is that Big Ten TV deal right now is not profitable for CBS or NBC.
Really?
And the ratings are not where they'd like it to be for some of these games, and some of their ways of making money on other kind of supporting structures aren't there yet. Doesn't mean it won't get there by the end of the deal, but the only people who are getting rich right now are a handful of Big Ten schools and a handful of people at Fox. So I think Campbell's play here is risky, and I think it is very much not altruistic. It doesn't mean that he's wrong or bad, but his proposed remedy is way more informed, I think, based on what's best for long-term for Texas Tech, rather than maybe for everybody else.
And it brings us back to something you alluded to, that it's about power. It's not really about anything else.
Yeah.
And the Big 12 and the ACC, they can bitch back and forth. Can I just say that? Bicker back and forth all they want. But those two leagues lag well behind the Big Ten and the SEC, and it is in their best interest to figure out a way to level with those two and then just let whatever happens on the field, which of course wouldn't change. The SEC and the Big Ten would still be significantly better than the league I cover and the Big 12, but at least financially there would be less incentive to destroy everything. If we could level the playing field, I kind of feel like, economically anyway, we could go back to normal conferences. But I don't think we're headed there anytime soon, because Greg Sankey and Tony Petitti don't want to give up the power. They don't care about an incremental increase in amount of money they can make. They like the influence. To me, that's the most important thing to them.
Well, it's not just the amount of money and the influence, right? It's the amount of money relative to anybody else.
Right.
If you make $100 million and you're in a world where you're in a zero-sum competitive game and your neighbors make $98 million, it's great to have 100, but the utility isn't the same as if you make less money, but your peers make way less money. And that's important to both the Big Ten and the SEC. So I wouldn't blame, theoretically, if I was a Republican lawmaker or somebody wanting to win statewide office in North Carolina as a Republican, I could certainly see them latching on to Campbell's ideas.
Yeah.
Even if that's not 100% free market, but that would unquestionably benefit athletes in the state of North Carolina.
No doubt about it.
Yeah, and that's not a cynical thing here. That's where the math and the politics behind this stuff gets a little bit complicated. If you're somebody in Idaho or somebody in Utah or a congressman in West Texas, you don't have the same incentives to do what Texas A&M wants.
That is true. Look, when politics and sports get together, I just don't think anything's ever going to happen. But I could just be digging my heels in. Matt Brown, I appreciate your time always, sir. Be well. We'll talk to you soon.
Okay, thanks, my friend.
You got it. At Matt Brown EP on Twitter.